amendments to the tax audit report. Please note, we won't be elaborately discussing on each of the amendment. For now, we'll just be highlighting the changes to the tax audit report. The main elaboration will be done in the next video. The first change to the tax audit report is the change to clause 12. Clause 12 requires us to report all the profits that have been taxable on a presumptive basis and have been credited to the P&L account. Thus, for this purpose, Section 44 BBC, which is an option available to the non-residents running businesses of a cruise ship operator, has also been included in this clause. The next change is in clause 19. Clause 19 requires us to report all the amounts that have been debited to the P&L account and are admissible under Section 32, 33 and 35 of the Income Tax Act in respect of the investments and expenditures made thereunder. However, out of all the other sections, 4 sections have been deleted from this clause, namely 32AC, 32AD, 35AC and 35CCB. The reason for them being deleted is because these sections have been obsolete and the deductions are no longer available in these sections. Next change is in clause 21. Clause 21 subclause A requires us to report all the expenditures that have been debited to the P&L account that are in the nature of capital expenditure or personal expenditure or expenditure in respect of penalties or any other expenses that have been mentioned therein. One such expenditure that has been included by the government this time is the expenditures that are incurred to settle the proceedings that have been initiated under any law. This means wherever any expenditure is incurred to settle any sort of proceedings that have been initiated under any law and have been specified by the government to be reported under the tax audit report will have to be reported under this clause. Next is clause 22. Clause 22 requires us to report the amounts of interest inadmissible to the assessee because of the delayed payments to the MSME organizations. Please note, earlier we used to report only the amount of interest that was inadmissible. But from now on, we'll be including the amounts that are required to be paid to the MSME organizations during the entire previous year. Not only this, we will be further required to report out of the above what amount was paid within the due date and what wasn't. Clause 26. Clause 26 deals with certain deductions that are allowable only on the payment basis. Such payments are the payments that are referred to under Section 43B, such as taxes, duties, or any other statutory payment. The new amendment to Clause 26 simply improves the precise language, thereby bringing clarity on what all is to be reported. The next is omission of clause 28 and 29. Clause 28 requires us to report the details of the transactions where the firm or the company receives the share of some other company either at no consideration or at lower consideration. Further, clause 29 required us to report the details where the company receives consideration in excess of the market value for issuing its own shares. So, wherever company issues its shares and receives a consideration in excess of fair market value, then reporting under clause 29 is required. However, as per the recent amendment, these two clauses have been removed from the tax audit report. Next is clause 31 subclause A and B. Clause 31 subclause A and B requires us to report the particulars of the transactions that include acceptance of loans or deposits or any specified sums which exceeds the limit specified under Section 269(s). Earlier, we used to report only the amounts that are received as loan or deposits or as specified sums. But from now on, we'll have to specify the amounts as well as the nature of transactions. This means if the loans or deposits or the specified sum have been accepted by way of cash or by way of journal entries or through transfer of any asset or liability, it should be reported as such through the drop-down that will be provided under clause 31. Next is clause 31 subclause C. Clause 31 subclause C requires us to report the particulars of the transactions including the repayment of loans or the repayment of any specified advance beyond the permissible limit under section 269T. Remember, earlier we used to report only the amounts, but this time we'll be reporting amounts along with the nature of the transactions. Say for example, if the repayment of loan or specified advance is made by way of cash or by way of non-account paid check or through journal entries or through transfer of any asset or liability, the same will have to be specified as such by help of a drop down which will be given in clause 31. Next is clause 36B. Clause 36B is newly introduced to the tax audit report, which would contain the details of the shares bought back by the company from the assessee. Say for example, if Mr. X sells shares of the company back to the company, then in such a case, the consideration received will have to be reported under clause 36B. Along with the amount of consideration, the cost of acquisition of such shares will also be reported by the assessee. So, with this, we hope our efforts to simplify amendments for you have been helpful for you. Please do remember to share your feedback or questions in the comment section. Or alternatively, you can mail us at talklevies@gmail.com. Thank you and stay tuned for other videos.